Todd Bubba Horwitz is back. He is the trader and chief strategist of BubbaTrading.com. And he is a veteran trader who's been in the markets for decades, having correctly called a number of big moves. And we'll be talking about his outlook for 2023. Welcome back to the show, Todd.
David, it's always great to be with you. It's a joy to actually speak with you about what's going on in the world today.
Pleasure's all mine and ours, of course. You are one of our more popular guests on Kitco. Todd, let's break down what's happening with the markets today. We'll focus on gold and silver and the stock markets. Big swings in all these markets after the Fed announcement at 2 p.m. And things have started to recover following big drops in both stocks and gold. Walk us through what happened.
Well, the whisper number or the expectation was 50 basis points. It was exactly what they got. And I think as often happens in markets, is the presumption of moving something would be much greater. So there was too much buying going in ahead of time. Very similar, by the way, to CPI yesterday. On Tuesday, the CPI number was a beat. But of course, the markets were up huge and then tanked and came back to resolve a little bit higher. Today, we were up and running again. And then suddenly out came the number and we had a very big drop. For example, the NASDAQ from its highs dropped over 300 points before coming back here now and settling somewhere down between 80 and 100. People have too much of expectation and they're trying to time out the market and be on the right side. And what happens, you get too many people too long going into an announcement like this, and you can only see selling. No matter what it was, you're going to see some selling because that's what we watch. And of course, remember, we're dealing in markets that, first of all, are trading at about 40 to 50% of normal volumes, number one. Number two, we have very little liquidity in these markets. So you tie all together, and it makes it easy for markets to fly over the place. Gold, however, did hold up very well. I think 1840 is a key number, and gold feels, as does silver and platinum, feel like they want to explode to the upside. And they're not waiting for an event, but I think they're waiting for an opportunity to attract some new money buyers that will push them out of these ranges that they've been trading in for quite a while.
All right, well, let's talk about gold in just a bit. But first, I want to talk about the stock markets. At exactly 2 p.m. after the announcement came out, a 50 basis point hike, the stock markets, S&P 500, and the other indices dropped dramatically. Intraday dramatically, of course. And on the day, it's down maybe 0.6, well, not maybe, but about 0.6%, which is a significant move, but it could have been worse. But like you said, this was baked in. So why this kind of adverse reaction to what was already expected?
Well, again, I think when you go back to, David, first of all, you say it very correctly, the percentage move, because 0.6%, when I started trading in 1980, that was 800. So, 0.6% of 30,000 is not a big deal. But you have too many people that try to get ahead of a number on either side. And more often than not, you see the reverse action take place, which is exactly what happened today. You saw too much money coming in buying that the number was going to be as expected. I mean, look, we were up, the S&P the Dow was up 100 points this morning. I mean, the Dow was up 250 points this morning. The NASDAQ was up over 100 this morning. Too many buyers into an illiquid market. And once, you prepare yourself and you're expecting a rally, and we didn't get a rally off the number, you got a sell-off because all of a sudden everybody panicked out and said, I better get out before it's too late. And of course, they pushed them way lower. This is a very common occurrence in markets, not every day, but anytime there's big announcements, if the street is too overprepared, okay, and trying to time it too fine, generally we will go the opposite direction of what people's positions are.
How do you trade a big announcement like this? This happens once a month, but generally speaking, ahead of earnings, ahead of a Fed FOMC meeting, how do you position yourself? Do you trade these announcements?
We actually, my group and me, we actually trade live. We trade the jobs number and we trade the Fed. We traded today. And as it turns out, we did not have a trade. We were looking to be a buyer down in those big dips, but the risk factor was way too high for me to want to step in and bring in my members along with me. But we were looking, and again, these are announcements are great to trade off of, especially when they open into at least a liquid market. Now, again, we are lacking liquidity here, but still the markets were open. So it gives you an opportunity. So I love to trade not ahead of the announcement because I don't want to try to outguess what it's going to be or what the reaction is going to be. I want to react after everybody who's in reacts. I want to react after that to them because generally the first reaction from those types of traders is wrong, which usually gives us a great opportunity to make some money off of their mistakes.
Generally speaking, though, I've been told, this is just for traders out there, I've been told not to trade these kinds of markets because if you're an independent trader and you don't have complex algorithms and bots working for you, because a lot of these hedge funds and large institutional investors, they got bots reading and scanning the statement the second it's out. And they're automatically placing trades based on an algorithm, scanning certain keywords for bullishness and bearishness and whatnot. You can't beat these big guys, so just basically stay low, avoid these kinds of events.
I happen to disagree 1,000% with that,
right.
Because again, I can beat the bots easily. I'm not reading. I don't even know what the news is. I had to have somebody who was watching and trading with me tell me what the actual rate was. I could see the price action. All I care is about the price action of the market. I'm not looking to carry a position for a year. I'm looking to make a trade that could last 2, 3, 4, 5 minutes and make a lot of money in that 2, 3, 4, 5 minutes or 10 minutes, whatever it happens to be. So I don't believe in the bot garbage. To me, that's if you're looking at long term, you're talking about the high frequency, all the other stuff. To me, that is more of a myth than fact, because a lot of times they get trapped and then they have to change direction. Whereas if you're a nimble independent trader and you understand price action and are leaving your opinion out of the market, you can certainly read the tape and give yourself an opportunity to make some capital right then.
Okay. All right, let's talk about that. But when you first saw the tape, I mean, let's back up. Before we talk about after the announcement, let's talk about before the announcement. I look at the CME Fed Watch tool like a lot of people. From my observation, based on watching this every single month, so far, the percentages have been pretty accurate in predicting what the Fed is actually going to do, especially the closer you get to the actual event. So right before the announcement earlier today, around noontime, it was 80%, 50 basis points. Do you look at that? Is that a good indicator for you?
I do not look at it because I don't, again, let's be clear. As a trader, I don't care. Because again, as a trader, I'm trading the price action that the markets create after they make the announcement. Okay. I knew what was expected, but even if I knew exactly what was going to happen, I still don't know how the street and the bots and everything else is going to react to that number. I want to play their reaction to the number. I don't want to be the one that has to react afterwards. I'd rather get in after that and react to what happens in the markets. Because again, ask Martha Stewart, who went to jail when she was sitting with the owner of ImClone, and she had inside information, and the stock did not go down. The stock went straight up, even though she went to jail and got out because he told her to get out.
Okay, so wait, just sidetracking. What happened? Did she lose money on that? I wasn't following.
She lost a lot of money, and she went to jail because she was insider trading because she had the information, and they still couldn't get it right.
All right, kids don't do drugs, don't do insider trading. That's what we've learned from this. Todd. Okay. All right. So we've established you don't trade the news. Okay, but what happens going long term now? Does this news that you saw today impact your long term trades? Let's focus on gold first before we cover the rest of the markets. Gold. What is your long term gold outlook?
I think gold's going higher. I'm long gold. I'm long both physical and contracts as well. My algorithm is long. I'm long, and I'm a big believer in owning a percentage of your portfolio in gold. Anyways. I think 1840 is going to be a huge number. If we can pump through there, I think you're looking at 1900 and farther. I think there's a good chance that in 2023 we'll see new highs. But again, we got to beat through certain levels before we can get there. I think silver looks better than gold and could make a bigger move in percentage basis. And I think platinum actually looks the best of all. And I think we could see some very dramatic movement. I think that in the year 2023, we're going to have a commodities boom. And that includes the hard asset commodities of gold, silver, and platinum. So I think they have an opportunity to go much higher, but they have to bust out of certain levels, because when you're looking at the technical parts of markets, that's the first stop or resistance or support of a market. And 1840 in gold is a very significant level that we have to break above before we can see this rally take hold.
New highs in gold. Let's come back to that statement. We've seen briefly over $2,000 in the gold price this year following the invasion of Ukraine, but that didn't sustain. So when you're talking about a new high in gold, is it going to be like this year when we just briefly touch that for a few days and then it comes back down? Or are we talking about a sustained level above $2,000?
I think you'll see sustained above 2,000. Now, again, let's be clear that that can change.
Yes.
In my viewpoint, long term, we're going to see much higher prices in gold. But as a trader looking and discussing with you, I think we can get there. And if we get over there, I think we can run. Remember, we've had a couple of attempts at new highs that have failed pretty miserably, right? Going back to 2011 and here. But I think if we can get through, and with the commodities boom, I think that will start to attract more money. And when you now start to look at the potential of a digital currency that the governments are talking about, they don't want digital currency. So there would be, I think, even a bigger demand for people to switch to gold and silver as well. So I think there's a lot of bullish factors for the metals, but still they must technically break above certain key levels to really get them on the road.
Well, okay. What factors would need to be in place for gold to sustain above $2,000? Let's talk about that.
Well, I mean, we'd have to have buyers would have to be more aggressive than sellers. I mean, demand would have to pick up. And I think that, if you look at the digital currency world, not cryptos, but government digital currency, people don't want to disclose every single thing they do. And I think that when you look at the fraudulent fiat currency system, I think people are starting to get more concerned that the currencies could fail. Look at this inflation, which is not a good situation. And if you give more power and more control to two organizations, government and central banking, that only create debt, they don't create any industry, I think that you could see a much bigger demand for gold. I think some of the non-believers in gold will start to become believers as they have to start turning in their script or their paper currency for digital, because eventually they're going to outlaw script currency or paper money.
All right, but specifically, going back to the question, specifically what factors in the economy would need to take place? Are we talking about lower interest rates?
No, the economy, I could care less. To me, it has nothing to do. Again, this is where I think too many people make too much of a mistake.
Okay.
The economy sucks. Gold should be much higher here.
Yeah.
The things that have been going on in this country, gold should be much higher, but it's not, because there's still a weight on top of it. There's still more sellers, or the sellers are still aggressive. The buyers have to take hold, and technically it has to break out. Fundamentally, gold should be higher than it is right now, as should silver, as should platinum. But they're not, because, of course, the sellers are still in control of those markets. And that's what you have to remember, that markets move on supply demand, but moreover, they move on buyers and sellers and the price discovery mechanism. And price discovery tells you where it's going to be. So what we want to see is gold to break above 1840 and hold, which would attract new money either to cover their shorts or new money to become buyers, because it got to a certain level. The economy, we've seen over the years, David, the economy has not had a major effect on gold. Gold didn't go crazy upwards in 2008 when the markets got hammered.
Yeah, that's an excellent point. A lot of people say to me, hey, gold's going to go up next year because of a recession, because of higher inflation, because of this and that. Well, we've seen all those factors play out this year. Gold relative to stocks and Bitcoin did very well, but you're right. A lot of people expected it to be much higher. So let me ask you this now, Todd. If the economy is not the major factor supporting gold or driving gold, what's going to make the buyers come out? What's going to tip the supply and demand fundamentals in gold's favor next year?
Well, I as I said, there's they're using, many countries, including the United States, are using digital currency right now. Okay. Now, if we go to digital currency, you have no freedom. Okay. They know what you're doing every moment of every day. You spend money, they know about it. Okay. I don't think people are real comfortable with that. You want to go to Las Vegas and lose $1,000 because you have it. The government's going to know about it too, and you may not want them to know about it. So again, there's a lot of factors that bring in the fact that gold could be higher. The entire crypto world being talked about as a potential store of value. Well, gold is still a real store of value. Crypto could be, but it's still air, right? It's kind of like paper currency. The overall currency markets, right? We got currency failing everywhere. And the valuation, even though they don't tell you that they're valuing, your dollar buys less with the inflation. So gold is retaining value better throughout this. And again, in my opinion, there's a chance that gold, silver may be needed for a currency again someday. And I think people are going to want to have something, because if it comes down to that kind of market, they may need to have that currency, that form of currency in their storage, not on a piece of paper.
Yeah, if I go to Vegas and lose money, I don't really mind if the government knows about it. I can just write that off my taxes. My girlfriend or wife, maybe that's a different story. But
Well, they'll know. They'll know too.
all right, so digital currency is bad for people knowing that you don't want to know. I want to go back to the point you made about gold being a new currency again. What do you mean by that? I mean, is it not a currency already, Todd? Define what you mean.
Well, do you carry gold in your pocket to go buy something at the grocery store?
I'm not that rich. I'm a
You know what I'm saying? Right now, we all use fiat currency or credit cards or whatever. But what happens when the fiat currency markets explode and they're no longer taking fiat currency? There's already some countries that won't take certain types of currency now.
Fair enough.
Okay, what happens when you need food and nobody will take in your money, or you don't have any money, but you've got precious metals that could be used as a currency? This is going back to the 1600s, before there was paper money, right? I mean, listen, I'm not saying it's going to happen, but the potential exists because of all this inflation and because of taxation without representation. People have the ability to take it on themselves to create some money themselves and have it in their pocket.
It's true. I mean, if you look at some countries around the world that are experiencing very high inflation, if not hyperinflation, one of the best ways for them to hedge is simply to buy another currency, store a bunch of U.S. dollars in their homes if they can, for the privileged few who are able to do that. But you're saying gold might take that place?
100%. I mean, right now, in fact, I will tell you, I believe that the dollar rally earlier this year was exactly that. Not necessarily people buying, but countries buying the U.S. dollar, because the true first place that countries go when they're afraid is to the U.S. dollar, because it is still the reserve currency as of today.
Okay, I know you said this will not necessarily happen, but it's good to kind of brainstorm and think about the scenario. Suppose it does happen that we return to using gold as a medium of exchange in our everyday life. Walk us through the process of how that's going to happen from A to Z.
Well, I mean, first of all, it's going to be for the fortunate few that had the foresight to buy physical metals. Remember, I don't believe that in the paper space, there's enough gold in the world to satisfy the demand of what the paper suggests. So it's physical gold. And if anybody believes in this, or if you're buying gold, again, forget about fear. I don't want to preach fear to anybody. But if you do believe in this, then you need to be a buyer of gold, not only bars, but in smaller quantities, coins, and you need to buy scrap silver at lower levels, because again, if you're going to have to use it for a currency, which I believe is a real possibility, then you're going to have to need smaller money, because who's going to make change for you? You know, it's a silly thing to say, but it's factual, right? You're not going to walk in with a 10-ounce bar of gold that's worth $28,000, let's say at the time, and somebody's going to be able to make change when you buy a loaf of bread. So you got to be prepared for all these, which means you, just like in money, you carry all kinds of different capital. But I think that there's going to be there's places now that take cryptocurrency. There's some that don't. And I think that there's places that will end up taking precious metals and some won't. But eventually, the crisis of the currency market and the central banking system could create this very scenario, because I think people are tired of having their currency devalued as it sits in their pocket.
See, here's my theory, Todd. Please correct me if you don't agree with this, but I don't think the government's going to allow that to happen, because gold being, a non-fiat currency, it's just gold. It's an asset, hard asset that's not directly controlled by the government. The governments can't keep track of what you're spending, and they can't keep track of what you're making. And so this is an easy way for people to not only avoid taxes, but also spend under the radar and avoid government control. And the last thing the governments want is less control.
Well, that is true, especially where you are. But it's also true here. It's also true here. Again, that is what will fuel even further that happening. Remember, the company that you buy from, they still have to buy from somebody. So they're going to have to convert that gold into probably fiat currency. So somebody's going to know, and they're going to know they sold it to you. So it's not quite that simple. The cryptocurrency fits more into that package of what you're talking about. The actual physical metals don't quite fit it, but it's close. And I understand exactly what you're saying. I disagree because, listen, if we have this problem, government's going to have a lot bigger problems to worry about than you and me buying things with gold and silver, because it'll mean that governments are collapsing, which is a very real possibility based on what's going on right now.
Okay, you keep giving me these great punchlines that I have to follow up on, Todd, but it's great. Keep them rolling. The government, okay, you're not saying the government is going to collapse. You're just saying it could. Again, hypothetical scenario, what could get us there?
Well, I mean, in this country right now, the United States of America, okay, you've got the far left, which are nuts. You got the far right, which are nuts. The difference is the far right's got guns and money. And if you start taking more away from people, they're going to rebel. Okay. And it wouldn't surprise me at all that there'll be another revolutionary war in the United States of America. Okay. It would not surprise me in the least to have another revolutionary war. I think that you can only strip people of their worth so far. And what this particular administration has done is they destroyed all small business. Now, it may not be a big deal, but it's a big deal to the small business owners. It's a big deal to the consumer, because it really destroys the system of capitalism. And what is the best situation in capitalism? It keeps everybody honest. It makes pricing and buying goods fair. When you destroy competition, goods get more expensive than they should be.
How have they destroyed small businesses, Todd?
By their tax measures. They started with COVID when they shut everything down. But of course, during COVID, they allowed Walmart to stay open. They allowed Walgreens to stay open, CVS, but all the local pharmacies, the local stores, the local grocers were forced to close. They were not considered necessary. Okay, so they went out of business. You know, how many people do you think how many small businesses do you think have a year's worth of income to stay in business when they cannot sell goods, when they cannot operate their business? That's what happened. This is what this administration has done, is destroyed the small business bit by bit. And nobody can compete with, like Chase Bank. No small bank can compete with Chase, because every bit of their cost is going to be much more, because they can't divide it into 100 or 1,000 branches around the country. This has been a destruction, a piece by piece, to destroy small business, and they've accomplished that very much.
Speaking of businesses, what's your outlook on businesses and stocks next year? You know, I've heard that stocks are a good inflation hedge because businesses, because businesses need to adjust their prices to keep up their margins, right? So inflation's coming down. Inflation's at 7.1%.
Inflation's not coming down. That's a BS number. 7.1 is BS. First of all, you got to multiply it by 3. Look, I don't. You have to believe me. I encourage everybody listening.
We are here to get your opinion. So yeah.
No, but I encourage everybody here who watches this. Look in your own bank balance. You tell me what you're spending. You tell me if it's only 7.7% or 7.1% year over year. I would bet my life that the average American and the average Canadian is spending more than 7.1% over what they were spending a year ago. So again, I call bunk on the 7.1. But of course, they exclude parts of food and energy, right? They only count 4% for food and energy, which is a joke, because the average person in the world, other than in a major appliance breakdown or a big fix, most of their money is spent on food and energy. So let's get the number right first. The number is not reported correctly to begin with, because it does not reflect what people are doing. Okay, so we're spending more money and making less. And if you go back in history, you'll see that your currency, your dollar, went a lot farther. So you're getting taxed for no reason. So inflation is not coming down. Inflation is rising. Okay. And the small business cannot compete because they can't get price deals on goods, because they can't compete with Walmarts and the Amazons of the world, because they can buy in massive quantities, getting cheap prices and getting better paper, better terms. Walmart, if you're a vendor for Walmart, you got to give them net 90. So not only are you working on a tight margin, but you're giving them 90 days to pay you, which you have to pay the credit on that debt. So you tell me how that works out. Okay.
Well, let's sum up here then. We have inflation, the PS number, according to what you just said, and stocks aren't looking good. So gold's going to go up to new all-time high, sustain above $2,000.
I think it has a possibility. Remember, I'm going to say one level at a time, but the outside chance exists of all-time highs. I think the stock market's going down 50 to 70%, which I've said all along. Okay, I think that there's big trouble. The supply chain is broken. The stores that have goods don't have enough of what they need. And we go back to one more quick example. I know we're running short on time. But if you go back to Black Friday, everybody wants to talk about how good Black Friday sales were at $9.2 billion. But that was a 2.2% increase from last year. What you forgot is you subtract at the time the GDP number, the CPI number, which was 7.7, that gives you a negative 5.5% if you believe in the CPI, which I don't. But if you believed in it, you're still at a negative 5.5%. So we're going backwards instead of forwards. And because we're dependent on Saudi Arabia and now Venezuela for oil and not producing it ourselves, it is hurting the rest of the world as well.
Okay. Excellent thoughts, Todd. And we'll look forward to following up with you in the new year.
Thanks, David. I appreciate being here.
Thanks for coming on the show. Merry Christmas and happy holidays to you. And thank you for watching Kitco News. I'm David Lin. Stay tuned for more. Don't forget to subscribe to our YouTube channel.